Welcome to another episode of Keep It Moving. My guest today, Pejman. How's it going?
Good, thank you. Thank you for having me. It's a
Glad to
pleasure.
have you here. Glad to have you here.
Thank you.
You know, you and I, we got connected through a mutual friend, and they just told me that, hey, you got to get Pejman on. He's very, very savvy, very knowledgeable of what's happening in the real estate market right now. He's been in the business for over 20 years. I mean, I want to have you dive into that. You know, my platform is based on pain to purpose. We like to be able to showcase people's stories on how they changed their lives from a place of loss, grief, incarceration, failures, whatever the case may have been that had them in a displaced position in life. And they overcame that. They beat the odds without any negative assistance. Everything was positively done, changed their life for the better. And now they're living their purpose. But just recently, I started incorporating expert opinions in multiple fields, business, health and wealth, finances, and this is the conversation, like I said, the mutual friend
Right.
we were having, and she recommended you. She said you'd be a great guy, very knowledgeable, like I
Thank
said,
you.
in
Thank
business.
you. Thank you. I saw your work. Your work is amazing. I think what
thank
you're
you.
doing on your platform is fantastic, and I think you're going to help so many people grow their businesses and how they want to help their clients and their
Sure.
surroundings.
Yeah, that's the goal, man. It's funny that you say that because I was just having a conversation with my past guest, and we were talking about how that there's so many platforms out there. There's a lot of information out there, and there's a lot of people doing similar things that I'm doing, and it's never enough, because we all go through things, life's trials and tribulations. They
All the ups and
they hit the
downs.
human race. Yeah. But tell me a little bit about yourself, man. I know you're doing mortgages. It's a little bit over 20
Yeah,
years
it's
plus
been over
years.
22 years. I've been in the mortgage business. I love what I do.
Okay.
Licensed in multiple states. We help people, obtain financing for all real estate transactions, whether it's commercial, residential, construction, or land. And through that, you meet people and you network. And the best feeling about any business is when your clients give you good reviews. They're happy. They return to you for future endeavors, and they refer their family and friends and colleagues to you.
Yeah.
It's so important to make sure that you're doing your best because in every field in business, there's competition. There's hundreds of businesses that do the same thing. So when you have a client, you have to show the client why you are the best at what you do and why they should choose you versus the other party. So, and that takes time. It takes time. People get to know you more, learn about your business more, about your education, about your background, and your knowledge.
Right.
It's all about knowledge. And one thing that I love in my life is I always want to leave you better than I found you. Right? So me coming into your life as a friend, as an advisor of your mortgages or your real estate or anything else that I'm going to be a part of, I want to make sure that I left a good impression on you and you have takeaways.
Yes.
Because it's always good to share your knowledge with the world, And I love what I do. I'm a numbers guy. I've always been a numbers guy. And I love it.
Nice. So your specialty is actually loans, or do you help people find a property, and if they find a property that they like, then you usher them off to a real estate agent, or do you do all the processes? What's your specialty?
Because we're so busy with the mortgage side of the transaction, usually when clients come to me, if they don't have a realtor, I can provide a list of trusted realtors that I know, because it's all about trust in the business. So I would never ever refer anyone to a client that I don't personally know or haven't worked with. So I do refer clients to different realtors and real estate companies to do the search. But before we do that, we do the pre-qualification aspect to see what they qualify for. Is it their first-time home, their second home, an investment property? What state are they are they looking to obtain the property in?
Sure.
And then based on that, we have a footprint, a blueprint of where they can go
Right.
and what areas, right? Because every area has a different price.
Right.
But one thing I can tell my clients, I've done this so many years, is the sooner you buy real estate, the better your future will be. Because no matter what happens with the markets, the rates, the pricing, as you can look at the last 40 years, real estate prices have gone up substantially every single year. Personally, I like to invest in real estate than stocks. A lot of people disagree, and I respect it. It's just real estate is a long-term investment. You know, you don't wait to buy real estate. You buy real estate and wait.
Well, what about the climate like right now? Because I was listening to like the Bloomberg last week, you know, and I do some day trading. So I use the Bloomberg as my source of information on what's happening in the market before the market opens.
Right.
So I'm listening to them, and they have specialists that come on in particular fields, and they speak about the current climate of what's actually happening in our economy today. So, and they were talking about that, you know, right now California is one of the places where we're lacking in surplus.
We are.
There's not enough homes here, and with the state of the economy and with the tariffs and everything that's involved in some of the pushback that we're getting because of the increase in the cost to build.
Right.
Are you seeing that as being a true statement that it's affecting the business?
I see it definitely. Yes or no? It depends on how you're looking at it. A lot of people that are ready to invest, they don't wait for the markets. They don't care about rates because they know that you buy now at a slightly higher rate. When rates go down, you refinance, but your purchase price is lower. For example, if you're buying a property for $1 million at 6%, and rates go down to 4%, and now that same property could go for $1.2 million. So you're going to borrow more, even with a lower rate. Your payments are still higher because you're borrowing more money. So I always try to, help the client understand that the sooner they make the decision that they're comfortable with, the more money they'll save long term.
So you don't see the tariffs affecting what you're doing right now. You don't see. First of all, is the economy healthy for right now for purchasing real estate, or
economy is healthy as an investor, as a buyer that you're going to buy a property for your own primary home. The way you have to look at it is this: the rates just got dropped right last week. Why? Because of two things: unemployment is high, and inflation is starting to go down. Now, when you have that type of category, down the line, when rates go down a bit more, because we're expected to get 2 more rate drops this year, let's see if that happens, hopefully it does, that could trigger more people that are on the sidelines to come back in the market to start looking to buy or refinance, right?
Yeah.
And so when that happens, the sellers, their motivation goes back up, and now they're seeing, instead of 2-3 offers, they're getting 5 to 20 offers on a property. So the pricing is going to start to go back up.
Speaking of offers, I remember there was a time when people were just buying without inspections. They were just buying once their offer got accepted because it was such a bidding war with getting a particular property. Is that still happening?
Not as much, but I would never allow my clients to buy a property without an inspection. Because
you remember that was happening, though,
yeah,
right?
it was happening.
Because they had a lot of foreign buyers coming in.
A lot of foreign buyers.
Yeah.
But
that didn't care about an inspection. They just bought the property.
They didn't care. But on the longevity, when you're buying a property without an inspection, if you have any foundation problems, anything that's major, you have a big problem. You got to tear it down.
That's so true, because when I first got here in 2003, I bought my first piece in Studio City. And I bought it south of the boulevard, right off of. Are you familiar with Studio City?
I'm a Valley boy. Been in the Valley all my life.
So you know what Whitsett is?
Yes.
Right up Whitsett, Sunswept, that right off of Ventura Boulevard, south of the boulevard. Bought a house up there, and those houses are on.
They're on slides. Yeah, they're on hills.
Right.
And caissons.
Right.
Yeah.
So I had to get a soil inspection, because they wanted to make sure that the soil was rich enough, and that in case of a slide, earthquake,
or flood, or anything, you don't want the house
to hold up,
sliding down.
Exactly. So that was something that was recommended for me to do, and I had bought real estate prior to that, coming from the Bay Area, but everything I bought was flat.
Right.
And when they told me that, they said, we need to get a soil engineer to test the soil. Let's get an inspection of that before you buy it.
Soil sample.
And I was like, okay, all right, well, this is new. And when I started to hearing about, and that saved me a lot. It was good because it let me know that I was in a good spot, and it was ripe for purchasing. I didn't have to do anything to reinforce the house. It was on a good foundation.
Right.
So when I was hearing that people were buying these houses without inspection, and I know that there's scarcity of land here in SoCal, and I was just thinking about what I went through, and I'm like, if somebody is buying a house in an area where they're going to need a soil inspection, they're on the hillside, man, that's not a good investment at all. So you must got some long money.
It's scary. It's
to
scary.
take that type of chance.
The people that were buying or still are buying properties without an inspection, or they waive their contingencies, most of them are flippers and investors,
right?
And a majority of them are general contractors,
right?
So those general contractors, in their mind, they're like, okay,
I'll buy this property. Sense. Yeah, it makes
even
sense.
if it's gonna tear down and the foundation's a problem.
Yeah,
I'm buying it at a good price.
Right.
I'm gonna tear it down.
Right.
I'm gonna build a mansion on it and double my money.
Yeah, I can see that. I can see that because they've got the skill set, and they've also got the manpower to be able to help them to do whatever they need to do. Where it's cost effective.
Right.
It doesn't cost them anything to
because they're in the business already.
Of course. Now, I know you heard about BlackRock. They're buying up everything. And,
they're buying everything up.
Yeah. How's that affecting your business? Because they're a corporation, so if they're buying up everything, you don't have the properties there to be able to get somebody qualified that can't buy nothing.
Yeah,
that kind of slows things down for you, right?
Yes or no? That's what you have to work with. Real estate agents and real estate companies that have been around a long time, that have experience, that have connections. Also, another key factor for me is I get a lot of properties that are off market from just random agents that they call me or they contact my office. And so sometimes you're able to find a client the perfect home without it being on the market. And there's no back and forth and price wars and fight. And
those are always good deals.
Those are my favorites.
Yeah.
But at the end of the day, when a client's buying their first home especially, I tell them to take their time, do their research, to make sure they love what they're buying, especially as their first time. Now, as a second property or investment property, things work a bit differently. People that buy investment properties or second homes are, usually used for investment.
Right.
They get a tenant in there for 12 months. They have a lease agreement, and after that, they're month to month. They can go, they can stay, and I always tell the clients to price point the right way, on the right amount, on the lease, because in LA County, especially, you're limited to what you can raise on your lease payment every single year.
Because they got that rent control. Yeah.
The rent control.
Let me ask you this. So, I want to play out a scenario. I'm first time buyer. You pre-qualify me, right? Realistically, what score do I need to have to be able to get prime rate, not subprime, prime rates on a conventional loan? And what does my down require for me to have a mortgage payment monthly that I'm comfortable with, being that, combined between myself and my wife, or my partner. I'm just kicking a scenario.
Yeah.
We got a combined income of like maybe $100,000.
Okay. So basically, you have many options. There's programs out there that are FICO-driven, based on your FICO score, and there's programs that are not. So if you go on a regular conventional loan or an FHA loan, you're allowed to put down 3 to 3.5%.
Okay.
Right? And based on your debt-to-income ratio, you're allowed to borrow a certain amount. Now, sometimes an individual has a lower FICO score. They can still go with a FHA loan.
Well,
FHA goes down to a 500 FICO.
A 500.
500 FICO.
Okay.
Now, if they're below 580, then the debt-to-income ratio has to be much lower. So usually, if you have a 580 FICO and above on an FHA loan, they allow you to go on your back end up to 55% debt to income ratio. If your FICO score is under 580, then your debt to income ratio cannot exceed on the back end of 43%.
When you say back end, what does that mean? For
Means
those that don't know.
So
Let's
back end,
talk layman terms to them.
right. So back end would be the entire mortgage payment. So principal, interest, tax, insurance, and mortgage insurance, and HOA if it's a condo or a townhome. And on top of that is all the other items on your credit report. So credit card payments, car loans, payments, student loans, anything that's on a monthly payment schedule on your credit report is counted on top of the payment of the mortgage to compare it to your gross income if you're W-2.
Okay, so basically what they're doing is they're taking a picture and they're drawing a picture that shows, okay, if you buy this house, the cost of owning this house, we take that and we combine it with your current bills. We take all that, and then we look at the money that you're making, and we'll see what you have between the two if it's affordable for you.
Exactly.
Okay, all right.
And now, basically, with all mortgages, things that you can't have is lawsuits, judgments, backed alimony and child support payments, IRS franchise tax board liens. Now, a lot of people have medical collections. Medical collections fall in a different category depending on the amount. So medical, you can't really always count against the buyer or the homeowner. But again, we want to do some homework, we do some explanation of what's happening, but we're going to make sure that when we pull the credit, that the client has everything in place, everything's on time, and again, you're not owing any money to the government, taxes, things like that. Collections are a big part of people's FICO scores going down. So, it's like, you have a service with a particular carrier for your TV, you have a 3-year contract, 2 years into it, you cancel that. You owe the money. You owe them the money for the 12 months that you signed up for and their equipment. So people throw the equipment away, 7-8 years go by, and then they get to talk to me, we pull their credit, and they have a $7,000 collection from that one carrier that they had 7 years ago.
But wouldn't you think that they would know that? I mean, because there's so many ways of being able now, like they have that where you can go and get a free credit report. There's a few of them out there that you can go to and get the first free credit report plus the score by paying $2, and you can see it. It comes directly from Experian, Equifax, and TransUnion. And you would think that somebody who's buying a house, right, would do that prior to even coming to you and trying to get pre-qualified. But I don't know. Do you see that often, or do people come already knowing what they're looking at through their credit report? They've already done the research.
I do, but you know what I've seen so many times with clients is that you have so much going on in your life that you forget that 6-7 years ago you had this carrier that had their internet and TV with you, and then you forfeited the contract.
Right.
So you have to read whatever you sign. That's the key. But if that case happens, then we'll go ahead and help the client. We'll reach out to the company now, because the collections get sold off as bad debt to a collection agency.
Right.
And they buy it for pennies on the dollar.
Right.
So basically, if a client has a $7,000 collection, you might be able to get away with a 50% payout.
Right.
Depending on the collection
maybe
agency.
even less. It depends.
Maybe
on the
even
price.
less. I mean, the lower the better.
Right.
But we do all that up front. So once the pre-approval is issued, there's no problems, there's no headaches, there's no stops.
Right.
We do a quick closing. Our closing is done pretty quickly. And for those individuals that don't have strong tax returns or bank statements or anything on paper, there's the P&L statement programs that we do. There's also the no-doc loans, meaning that we don't show any income.
Oh, I remember they stopped that for a minute. They brought that back.
It's been years now.
Okay.
But it does require a higher FICO than the usual and a higher down payment.
Right.
And that also goes for refis. If someone wants to refinance and we have to go with the no-doc option, we can. You have to have reserves, good score, and obviously on the no-doc loans, the rates could be slightly higher because it's private money. And so, again, when a client comes to me, we look at all options.
Mm-hmm.
We look at the best option, the cheapest option for them, because not everybody has huge down payments.
Mm-hmm.
So we want to try to
This
see
is
if we
true,
can-
especially today, man, with the way things are. I mean,
Now, the caveat is, to all my clients,
Mm-hmm.
if you have the money, put the 20% down
Mm-hmm.
because you waive your mortgage insurance,
right.
right? That's an extra fee that you have to pay on top of the payment if you're under 20% down.
Right.
But there's ways to get rid of that. You can refinance when you build equity. You could pay down the mortgage, right, and do a appraisal value on the property and look that they're under 78%, and we can remove the PMI.
So basically, you, with all the programs that you have, being in the business for 24 plus years,
23.
right, the knowledge and experience that you have, I mean, I see you as an expert. You feel, how many people have you had to turn away? What's your closing ratio?
Thank God we have 98% closing ratio. Once in a while, things do happen during the process. So when you're in the process of getting a mortgage, you can't open new accounts. You can't change jobs.
Okay.
You can't pull your credit.
Yeah.
You can't co-sign for your uncle, sister, brother.
Yeah, I
or
was going to ask you
whatever.
about that other 2%. Is that part of it?
Exactly.
Yeah.
It's always things that pop up, and sometimes things do pop up while we're in the process that it's not on the credit report. So if there's a fix or way that we can fix the situation, then obviously we want to help the client obtain the property. Sometimes we may have to extend escrow. Sometimes it could be a mistake made by the IRS or any other agency. Mistakes do happen, especially with common names.
Right.
So we want to always eliminate that and clarify it.
Yeah.
But for the most part, it's doing your due diligence up front. And, when I meet a client for the first time, I go through a series of questions. We go back a couple of years, were they previously married, unmarried, what's their status, what's their, what kind of job are they in? If you're in a middle of a mortgage, you can't change jobs. You can't go from W-2 to a self-employed, right? You can go W-2 to W-2, that's fine, but I always tell my clients to keep everything status quo while we're in the process so they don't jeopardize their mortgage and their closing.
Yeah.
And at the same time, on a purchase, you have your earnest money deposit, you have your contingencies. So the key of closing successfully is communication, communication, communication. I will reach out to my client by text, by phone, by email. I pick up my calls till midnight, 7 days a week. Because if they're calling me, there's a question. And that's what you get with me and our company is that we're always available for you versus your traditional retail banks that are 9 to 5 and
They shut down. 9 to
they
5.
shut
You gotta
down
wait till the
and you
next
have
day.
their office line and
Yeah.
extension.
Yeah.
Me, I give every client my cell phone number.
Right.
I've had the same number for over 25 years. So regardless of what state the client's in, if they need me, I tell them, call me, text me, email me. Unless I'm sleeping or with the kids for a few, I will get back to you.
Yeah.
I always return calls and emails and texts.
So when you say quick close, what is a quick close? There was a time when we had 3 weeks you can close, and that was before 2008 when
Private money-
things went south.
Right.
But right now, what's a quick close? Realistically, quick close, dotting your I's and crossing your T's. All the documentation is in order. Everything's aligned. What's a quick
On a
close?
conventional loan, you can close in 15 days.
15 days. Oh, that's, man. Wow.
Private money,
Yeah.
you can push 7 to 10 days depending on the situation. But usually escrows are for 30 days. When a realtor reaches out to me, I tell them to do a very low number of days on the loan contingency and appraisal because the second their offer is approved, I'm on it. Disclosures are out, appraisal gets ordered. We do things very quickly, and being a direct lender and a mortgage broker gives us the power to control the entire transaction from A to Z in-house.
Wait a minute. I caught that. You said being a direct lender.
Yes.
So you guys can also fund a deal.
Correct.
Oh,
With our
nice.
own money.
With your own money. Nice. And what is the difference between you funding a deal and them going to a bank? What would be the advantage of them doing a deal with you over going to a bank?
So
Or
basically,
through some of the traditional lenders?
right. So we have about 120 lenders that we work with ourselves, and they're all wholesale lenders. So basically, we can broker out the loan to one of our lenders, or we can fund it in-house, depending on the risk factor, depending on the state, depending on the type of loan it is. If we're able to fund it in-house, we will, because we have full control and better pricing, and of course, quicker closings. So we always want to do what's best for the client. As far as that goes, again, it goes back to communication. Once I'm working with a client, whether they're buying, refinancing, building, or they're looking to buy even land, I'm in constant communication with them to make sure that they're following all the protocols, all the things that we spoke about. And, I tell them, again, you have a question, call me. Because people do forget things. They have a day-to-day life going. They have their wives, their family, their kids, their businesses. So you want to add value to the client by lowering their stress level, right? And their anxiety if they have, or the worriness. You have to always continue to let the client know that they're in good hands. And those good hands comes with how much you love what you do, how much you care about your client, and in my opinion, also experience. It's like you can go to a doctor that's done surgery for 3 years or for 15 years. I personally would choose the doctor that's done for 15 because they have more experience, have more knowledge.
Sure.
So that's been the key of my business. I love what I do.
Yeah. So what age group are you seeing right now that's doing the most buying? Is it between the ages of 29 to 39, 39 to 49, 49 to 50, et cetera, et cetera?
Most buying is being done between 25 and 47.
25, 47. Okay. Okay. Okay.
Different generations have different methods of acquiring, money, whether they're doing social media, whether they're doing talent shows, whatever they're doing. Everyone on this planet has a gift. You are here to serve a purpose for yourself, for your family, for your clients.
I believe in that.
And
That's true. Yeah.
You
just got to find out what it is. Got to figure it out.
Yeah. And one thing that differentiates myself from other companies and other mortgage brokers and loan officers is that cases have been where I told the client, you're not ready. You're not ready to buy this property, or you're not ready to go this big.
So what I'm hearing here is a little counseling comes with it too.
A lot of counseling.
Yeah.
Because clients don't know, especially when they're new into the buying process. Sometimes they're looking at homes that are $2, $3, $4 million, but their budget only covers about $800,000.
Yeah.
So that takes you from a nice property to a beautiful townhouse.
That's that.
or a condo.
They got champagne
expectations,
expectations, but
wine,
wine money.
Yeah. So that's all done in the process of the beginning stages.
Yeah.
And of course, we want to always get the client what they're looking for.
Sure.
But the number one priority is to make sure that they're comfortable, that they're able to afford, because there's always other expenses when you own a property. There's your maintenance, plumbing, there's landscaping, pool service. All these things are on top of your payment. So we want to make sure that the clients are always in a great state of mind to be able to afford the property, whether it's an owner-occupied or a rental property, because you want to collect good amount of rent and profit from that instead of losing money. And if it's not prioritized the right way, I've seen it that the buyer or the investor can lose money on a monthly basis because they're spending more money on the property, collecting less on the rental.
How many of them are coming to you with this thing that's circulating right now, a way of buying a house and getting into investing into real estate? If you don't have large capital, you want to get your first piece, house hacking. How many people are coming in and looking to do that? And explain house hacking.
A lot. We do a lot of fix and flip loans where you can buy a property with a certain amount of down payment. Then we help you with your budget and your ARV, which is the amount that the value of the property will be sophisticated on once the repairs are done. So if you're buying a property for, let's just say, $500,000 and you're putting 10 to 15% down, and you have a budget of, say, $200,000 to upgrade that property, the ARV or the future value after repairs it's going to be about, say, $1 million. So basically, you're buying it for 500, you're putting in 200 into repairs, and your sellout will be $1 million.
Now, there's no guarantees when it comes to doing that because
There's
anything
no
can change.
guarantees.
But California is some of the best real estate to buy, correct?
Correct.
I mean, because equity is always strong in California.
It is, depending on your
Particular
budget.
places, right?
Yes, but
Yeah.
depending on your budget, we could always buy out of California. You don't have to stick to California. There's Florida, there's Texas,
Yeah.
There's New Jersey, there's all the other states that you can look into, Florida.
Yeah, that's pretty cool too because I can imagine for you would also after sitting down and having a conversation with the client and finding out what their objectives are and what it is that they're trying to accomplish. It may be that they want to do a little house hacking and live in it for, what is it, a year now or two you got to live in it before you can move
so
out?
when you buy a property and you're stating that it's a primary home, you have to live in that for 12 months.
At least 12 months, right?
Yeah.
Okay, then you want to move on to another one. I'm quite sure it's imperative that you do your research to know what you can offer them to be able to assist them in their situation
Oh, yeah.
and in their
I
goals.
do a lot of research in
Yeah,
the beginning.
yeah.
You have these online companies, get your pre-approval in 15 minutes. Makes no sense because it takes more than 15 minutes to do your due diligence and homework and truly search what's the best for the client. And so that's the difference with dealing with wholesale versus retail. And with us, you get the personalized service, always available, always giving you updates. And our reviews on Google and Zillow shows that for itself because, we have amazing reviews.
Reviews play a big part in business today.
Any business, doesn't matter what business, if you don't have repeat clients and you don't have referrals from those clients that love you and cherish you, you will not stay in business. Doesn't matter if it's a food industry, car industry, real estate, you have to have a returning factor of clients. And the only way a client is going to come back to you or refer you their family and friends and colleagues is that they see, wow, this guy is above and beyond everyone they spoke with. So you have to shine like a diamond from the get-go.
Yeah.
And never give up.
Yeah. Do you find today's customer is a little bit more finicky, a little bit more, I would say, cautious when it comes to sitting down for the first time with a new business such as yourself?
Absolutely.
Before you are able to, even though they may have done some review searching, word of mouth, got a referral, do you find them to be a little bit more cautious coming in on the initial meet and greet of doing
Absolutely.
business with you? And how do
Absolutely.
you get them to where they're comfortable and trust you to want to move forward openly?
Well, what I do is when I talk to a client, it's like an interview. It's like a Q&A. We have a certain number of questions.
Yeah.
It could take, 30 minutes. It could take 15 minutes. We don't time it, but we want to make sure we're asking the right questions. One thing that I've seen with consumers in general is that they're being fed the wrong information. They're being fed incorrect information, and they're being lied to. So when they have all that information in their mind, and then you give them the truth, the reality, the realistic factor of it, it's a payment shock for them, or just a shock in general. So you break it down and you explain to them that what they were told from this individual or that company or that ad online is misleading based on X, Y, and Z. So you just have to kind of dissect what they know and to make sure that they've been told the right information. And unfortunately, in many businesses, you have bad apples. And those bad apples don't care about the future of their clients.
Yeah.
So when the client goes to a bad apple and they come to a good apple like me, right, you got to differentiate and explain and break down what they were told and what the true reality is.
I can see that there can be even more so, a lot more bad apples out there because, everything is moving so quick and people are reaching and grabbing for industries that they think that are very lucrative and that they can get in quick, which the mortgage business was a
Yeah.
time when you just go take your test.
Yeah.
You take your test. Somebody won't let you. Hey, your license there, or they need somebody that they think has good sales skills and good customer service qualities. They give them a phone, give them a desk, give them a computer,
Yeah.
and get
So
them
here you
dialed
go.
and get them going. And I've seen a lot of that in the business that I'm in, I used to be in, which was the car business. You see a lot of advertisements, a lot of people trying to break into real estate.
Yeah.
So with all those bad apples out there, it could leave a bad taste on customers. And that's why I was asking you that, because I could see you kind of like fighting with a customer a little bit to get them to understand that, hey, you've been misled. I'm sorry about that, but this is the truth. I can see that.
Yeah. Like one of the examples of many is you see these advertisements on TV or online where they advertise to the consumer that you can get any loan with no cost.
Yeah.
It's possible,
Right.
but what they don't tell you, or it's in the fine print, is that when you get a loan that has no cost of closing in it, they just give you a much higher rate or a program that's not fixed for the entire life of the loan. And so you're still going to pay closing costs, but you're paying it on a monthly into your payment. So when I have clients that are, asking questions about cost, we give them options. We give them multiple options, 5, 6 options with cost and without cost, and we break it down. We break it down to, are you going to be in this home for 5 years? Are you an investor? Are you going to be growing your children's property? Depending on the long or short-term goal the client has, we customize the loan to their specific needs.
Yeah.
So if they are keeping it short-term or long-term, that particular loan, with whatever cost it's going to carry, it makes sense. And again, that's part of the service that we offer, where online or with retail banks, they don't really dissect these things until you're already in it too deep. And once you're in it too deep, you have your contingencies, it's going to be hard to change lenders.
Yeah.
Now, I do a lot of times get referrals from various individuals while the client is in escrow in the middle of a deal and their loan got denied after 2-3 weeks. Or there's an issue with the loan, or they can't close. So the realtor or the family member or anyone that knows me will reach out to me and say, hey, this is what's going on. This lender that they're working with can't perform. Can you help? And 98, 99% of the times, I've been able to help the client close with less cost and a better rate.
Of course you, because I was going to say, you probably even know the lender that probably turned them down, and you probably know why after 24 years of being in the business.
I do. I know all the lenders.
There's a pool of lenders, and there's only so many in there.
Right.
Yeah.
Every lender has their niche. One does one thing, one does the other. Some lenders have a good niche with self-employed borrowers. We do bank statements for the business, whether it's 3, 6, 12, or 24 months bank statements. We look at the deposits, see how that's averaging in the last month and the last couple of months. Then there's the P&L, profit and loss statement loans that we do for our self-employed borrowers and investors. And then you have your traditional W-2 and pay stubs for the individuals that are on a salary job, hourly job. So it's that. And then again, those individuals that are self-employed, and some people have a business that they don't show a lot of taxes, right? So those individuals go with the no doc program, slightly higher down payment, slightly higher rate, but I always tell clients, don't worry about the rate now, because no matter what rate you have now, whether you close your loan in 22, 23, 24, 25, now that the rates are starting to go down, you will have an opportunity to refinance. It's about buying it at the lowest purchase price. That's the goal. And as rates go down, that purchase price is going to start to go up.
Right.
That's
right.
It's not a guarantee, but just based on
it's a strong possibility, especially like I said, you buying properties here in California. When 24 years in the business, you've seen a lot. You've seen a lot of changes.
I've seen a lot of changes.
You're a broker, right? Are you a broker?
We're a mortgage broker and a lender, correct.
Mortgage broker and a lender.
Yeah.
Okay, all right. 24 years of doing that, you've never wanted to venture off and do anything else? You just wanted to concentrate on the brokerage side and the lending of it?
I'm fully active in the mortgage side of the business, but at the same time, I grew up in the car business with my family. My father and uncle had a couple body shops from 1989 and a car wash, so I grew up in the car business that way. But I wanted to do my own thing. You know, I didn't want to, even though I've always had an opportunity to be partners with my family in the auto body business, the collision business. I love it. I do have an ownership with my uncle on that, and I do assist my uncle with the body shop business. But we have a team, right? And I have a team with a mortgage company. So whether I'm working on the mortgages or assisting someone with their car being damaged, everything gets done professionally. There's no neglect on any sort. But I love cars. Been my thing my entire life. So do what you do, right? You do what you love. Yeah. Mortgages is my thing, and you know, the collision auto body that we have is also something that I'm involved in. I'm a small owner in that, so I love it.
Are you in AI? Are you guys utilizing AI?
Very little.
Any type of way?
Very little.
Yeah.
Very little.
It's big though, man.
I know.
It's the wave.
It's changing.
It's the future. It's changing a lot. I started to get into it about a year ago. I use ChatGPT 5.
Oh, yeah, I use that here and there.
Yeah, man. Yeah, but it's amazing how it cuts down the workload and how much I can get done because I'm running this and I do my TikTok and Instagram and do inspirational quotes. I like to inspire and motivate through those two platforms. This one is where people come sit down and be able to tell their story, be able to give a level of expertise in particular fields like we're doing right now, and just putting a voice to everything that we're doing in the other areas. But if people want some daily motivation, daily inspiration, they can go there and they can just go down the line and just pick something if it resonates with them to be able to pick their spirits up. I love it. Give them a little boost to get through the day because, you know, we all need that.
Everyone needs that.
It's tough out here. Anything that we can do to enhance ourselves in a good way without doing something negative that's going to hurt you in the long run. You know, and go grab some spiritual food from that, then, you know, I've got it out there for you, and that's the goal.
You know, when I see people that do the negative stuff, I tell them that, look, you're just numbing your pain for the time being. Once that medicine or that alcohol wears off, your pain is back. So you have to go to the core and get to the bottom of that pain.
Yeah, you can't mask it. You can't put a Band-Aid over it.
It's a numbing situation.
Yeah, you can't do that. You know, you got to work it. You got to work it. You got to take action and make it happen in a positive way, and then make it a lifestyle, basically, because life is filled with peaks and valleys. That ain't gonna be the first time you run into a situation that you may feel overwhelmed or stressed about. But where are your tools at? What do you have in place to be able to help you to be able to navigate through this, to be able to come out on the other side to where you're dealing with smooth sailing and you're also dealing with a calm within the sea of life's possibilities and life's ups and downs. It's just like I said, the sea washing up to shore. It's a continuous thing. It's ongoing. That sea never stops. That's just what it is, and that's how life is too. But you have to be prepared for that. So, like I said, I put the information out there for people to be able to grab that. You know,
that shows a level of care.
Yeah. Well, we have to. At the end of the day, we all we got, right? Going back to the AI. Now I want to look into that because, like I said, I use it a lot of times to help me with if I'm formulating letter or something. When I write it, I put it through there and just let that be the guiding post as far as refining it. Then, of course, you know, it doesn't always get it right. It still has some growing to do, but it just cuts down on the time that I would use on having to continue to write and research, and it's just very helpful, you know, and I can see that being an asset for you in your mortgage
definitely I'm going to look into it
as well. Yeah.
On the social media platforms that I have, you know, every day I'll do one or two posts, informational. I hate salesy and pitchy stuff, so I don't do that. And also I do a video once a week. Yeah. You know, I call it a Tuesday tip, and every Tuesday, you know, I get on my social media and I create a video. A short video, you know, a minute or less. Talk about what's going to happen with the market, what to expect, what's happening. Yeah. Kind of, I give my audience a bit of an information on what's happening and what's going to happen, and that's actually been very good for me.
Yeah, that works best too, man, because, you know, I'm with you on that. I'm not the guy to do that salesy, cheesy shit. It's just, to me, you know, it just doesn't feel good to me. I don't feel comfortable doing that because, you know, people are much smarter than what a lot of times the individuals or the companies who are putting those pitches out there take them for it.
Right.
People are a lot sharper, a lot smarter
Right.
than that. They can see you're telegraphing it. And for me, what I found that works best is, like I told you, I used to sell cars.
Right.
And when people come to me, I'd spend time with them,
Yeah.
figuring out, this car you want, why this is going to work, why it's
What
not going to
options,
work,
what
your
model,
options
what's
are,
your
what
budget?
model, what's your budget.
First thing is the budget.
What's the objective, who's the car for, and then get into just giving them information. Here, read this, look at this, and this is what the car, how it performs, this is your comforts, these are your benefits, these are some of your some of the technology, this is how it works, and just having a conversation, just being human.
Yeah.
And giving them information so they can make that informed, educated decision based on the information you give them. In that business, they don't always buy right on the spot. But when you are human and you give them information, 9 times out of 10, and you're courteous and polite, and you know what you're talking about, you know the product, they turn around and come back and they buy from you because you built that. You built that. And it's the same thing with, like you're saying, having your platform. Give people information, and people, 9 times out of 10, they will want to get in your DMs or contact you and say, hey, listen, I saw you were doing this. Can you tell me a little bit more about that? And then you start to get into the business side of it.
Yeah. I mean, it's happened where I get a call from someone, no clue who they are, different state or in California, and say, hey, my uncle's friend's best friend saw you on social media, and you were speaking about X, Y, and Z. Can you elaborate? And I said, well, thank you for calling. And I get so happy because you see that the work you're putting in is actually, paying off to where people want to learn more about what your discussion is or what it is. So when I get a call in general and people ask questions, I make sure I answer every single question. And look, when it comes down to videos on social media, there's a lot of cheesy shit out there, right? I always want to put myself in the consumer's seat.
Yeah.
And so, okay, if I was a consumer, if I had no clue about mortgages, what are the questions I want to ask? What do I want to know? What if somebody just went through recently a divorce? How does that work when you have a property together with your spouse or your partner? What if, God forbid, someone had a death in the family? How does that work, right? Because you want to avoid probate court. These are all things that we do in the beginning of the application to make sure the client is protected and that that they know what they're doing and where they're going and what their options are. It's so important. I hate to say this, but it's good to educate the consumer. But the consumer doesn't want to get educated because they think they know everything.
When you say you hate to say that, what do you mean by
that? Excuse me. A lot of consumers get offended when you come off that you're teaching them mathematics or how to calculate something or how to learn about a mortgage or a program. So the way I approach it is to not educate them, but to expand their horizon and give them more info and let themselves sometimes educate their own self. A lot of times, you have a buyer or a person that wants to refinance their property, husband or wife, and then they talk to their mother, uncle, sister, brother, grandpa, and they all get different answers. And that's where the challenge comes in. That, well, how do I tell this client that her dad or his father or his mom is wrong? It's not how it works, right? So there's a fine way that you have to take to approach that answer and that question. Because at the end of the day, you don't want to upset anybody or offend them.
No.
And nowadays, people get a bit more sensitive with things. So you have to respect their emotions and their feelings. But at the end of the day, I always tell the client, I'm saying this because of X, Y, and Z to help you make the right decision.
Right. Just speaking of that, when you said the probate court, that brought up a thought. It was a question I wanted to ask you, and it was regarding bankruptcy. What if people have a recent bankruptcy?
So you can go get another mortgage type loan. You have to be out of bankruptcy for a certain period. Usually on private money loans, you could be out of bankruptcy the next day and go into a property.
Right.
On the conventional, more normal side of loans, they require a minimum of 2 years.
2 years.
Right.
Okay.
So FHA requires that, and other investors do.
So you got to be discharged. Your bankruptcy's got to be discharged.
Discharged,
after 2
everything
years.
is exactly.
Oh, okay.
Now, if somebody had a bankruptcy and they included their mortgage in the bankruptcy, that works a bit different because once you include the mortgage in the bankruptcy, it's not being reported anymore on your credit.
Yeah.
So there's different ways, and of course, if they're dealing with the right bankruptcy attorney, that attorney is going to direct them to the right areas, and that's why again it's important to work with people that that are knowledgeable and experienced.
Good stuff. Good stuff. Pejman, where can people find you, man? I think we got some good information here.
Best way on LinkedIn and Facebook is Pejman PJ Gabayan. On Instagram at mortgageloans.pj. And also on TikTok, you can find me under Loan Officer Pejman PJ Gabayan. If you just search PJ, you'll find me.
Yeah, yeah. Well, anyway, I'm going to have you give me all your links because when I air it, then I'm going to drop the links in there so people will be able to find you and be able to reach out to you and do a little bit of consultation. And,
and of course, my phone number is the best way to reach me also.
Yeah.
So 818-281-4633.
Okay.
I've had that number for over 25 years.
Yeah, I'll drop that in to the links too. And then right before I air it, I'll send it to you, let you review everything, make sure everything's lined up correct. And then we'll put it out there.
Awesome.
Hey, man, thank you for stopping by.
Thank you so much.
All right, man.
Pleasure.
You
Thank
too.
you.